Hi everyone, Matt Stuart here with BankerRonan Realty. I have a special presentation today. I'm here with Helen Rutledge of the Mortgage Coach. We're going to talk about interest rates, we're going to talk about buyers and sellers, and we're going to talk about what's kind of going in the market and where things are going from a mortgage perspective. So hope you guys enjoy. We're going to jump right in. So Helen, where do you see mortgage rates going for the rest of the year? And do you see a slowdown or a pullback going into 2023?
Well, it's been a very scary time in the market recently, especially with COVID last year where all the rates really dropped, and then all of a sudden January, February they were starting to creep up, and then all of a sudden inflation was crazy. So there's still two more increases or announcements, October and December, and maybe a small one in October. I don't foresee one in December. So it depends on where inflation's going at that point as well. If it's taken a dip, I don't think we're going to see a lot of high increases in the spring or in the January, February timeframe, but I do anticipate within 6 months it's going to start to dip down.
Okay. So in the next 6 months, we're going to see interest rates still continue to rise. So people who are looking to either buy or sell, keep that in mind. Rates are going to still continue to rise. So what's your prediction for the 2023 rates, knowing that you're saying the next 6 months we're going to see a couple increases, though they're smaller than what we have seen? What do you think is going to happen in 2023?
I think they're going to stabilize. I think they're going to, maybe come down a little bit, but they're going to be pretty stable.
Okay. Now, do you think they're going to go below the pre-pandemic numbers or be back to like stable in that area, or they're going to be higher than them?
It's probably going to be more like the pre-pandemic.
Okay.
A little bit higher than that. I mean,
Okay.
The pandemic, obviously, it made people want to spend more money. The prices were high. It was cheap money.
Okay. Now, do you see inflation? Do you see inflation on your side coming down more? Do you see that balancing out? Like, what are you hearing on your side of things for inflation?
I think what they're doing with the rate hikes, as much as people are hating it, is that it is having an impact on inflation. People are slowing. I mean, you must notice it yourself. That
yeah, we definitely do.
People are taking a breath before they go and do purchases.
Yeah, they're thinking twice about spending their money.
Exactly.
Okay.
Money's not as cheap as it was.
That is for sure. If I was a buyer in the market, what are the things that you need from me right now to get me approved for a mortgage under the tighter restrictions that we're seeing?
There's definitely a pain point in what I'm going to say, but it's documents.
Okay.
Heavy up front with the documents. Make sure you have those intact. So you got your 2 years of T4s, 2 years of NOAs, T1 generals for business for self, pay stubs, job letters, all those up front, so we can have a good picture of where you're at.
Okay.
That way we can do the pre-approvals, and there's no issues when we go to the lender or we're getting ready to close. All of a sudden 10 days before, people are freaking out because they missed something or there wasn't something asked ahead of time. It's a pain point, but those documents are so important. Okay.
Now, are they requesting bank statements as well from them from buyers?
Yeah, so for business for self, 6 month bank statements. Anybody who is, I've had a few clients where they're new to business, so like January, so they don't have the 2 years before. So 6 month bank statements matching up with invoices.
Showing proof of deposits and stuff like that, especially their down payment, right?
Master business license or, that kind of stuff.
Okay, it's good to know. So what you're telling me is for you to go to a lender with a client, you need to tell a story. So in the end, what has to be in that story?
So in that story, we have to make sure that all your documents are supporting your story. That's important. Okay. So whatever the buyer or seller gives to me, I want to be like, okay, I understand fully what's going on, and this is what I'm not selling, but this is what I'm selling to the lender.
Okay.
Right? So if they see any holes in that story, that's when they're going to ask for more things. So the more complete that we have everything, the better, easier it's going to be when we go to the lender.
So as you're saying, in the end, you need to tell the story, it needs to be complete. So documents.
Yes, absolutely.
So we just answered questions about what you need from buyers. Again, documents. What would you need from a seller right now? In today's market where things are definitely tightening up, but you do have homeowners that have lots of equity. What kind of things do you need from them if they're looking at a refinance to maybe do a home improvement or looking to buy like an investment property? What do you need from them?
So income documents are important as they were with buyers. When it comes to refinancing or they're looking to take out equity, the equity part is important. So then we come to the appraisal part. So you can have all your documents in a row for all your income and everything looks great, but what if it doesn't appraise properly?
Okay. Now, are you talking about a real estate appraisal or are you talking about an appraisal from an appraisal company? They're very different, but sometimes they kind of get misconstrued.
It's an appraisal company, not a real estate appraisal. And it's hard because if you don't have approval from a lender, getting an appraisal beforehand is not going to work because not all lenders accept those appraisals.
Okay, so I can go get an appraisal on my home, but if I'm looking to do a refinance, they may not accept that appraisal.
That's correct.
Okay, that's good information to know, because some people might think we can go and get an appraisal, but that's not going to hold weight unless it's the lender's appraiser.
That's right.
Okay, that's very good to know.
That's right. People use their equity for tons of things, whether it's a refinance to do an investment or investment property. So then you have to make sure that your numbers align. And this is a little more technical, your TDS, your GDS.
Okay.
So you have to make sure that you can afford the house that you have,
Right.
and then afford the house that you're looking to buy for a rental and the rental income. And I'm just gonna jump in here with the rental income. Not all lenders use 100% of the income.
Okay.
The rental income.
How much
They'll
percentage
use-
are they typically using?
Some use 50%, some use a little bit higher, some use a little bit lower. So that's important.
Okay, so you got to make sure the property has good cash flow, stuff like that, so you're able to actually utilize that rent that you're able to towards that purchase.
Yeah, that's correct.
Okay. So if I'm a buyer or a seller right now, I know you've covered the buyers, what you need from them, same with the sellers looking to either refinance or buy an investment property. What's the difference right now for a buyer and seller looking to get in the market or make a move of some sort from an A, B, and the private side? Like, what are the big differences, and what should buyers and sellers be looking for in terms of who's lending them the money on the A, B, and private side?
So on the A side, it's very, the box is very small, right? You have to fit into their conformities.
Yep.
B side, you have a lot more flexibility. You have maybe some income that is not your typical income. You may have side jobs, maybe you do DoorDash or, things like that.
More non-conforming income.
Non-conforming income, yeah. And the B side will look at that where the A side may not.
Okay.
And then private, it's very open. You just have to, you obviously have to have income, you have to have equity, but the perimeters
Still have to tell
are,
the same story, right?
Yeah,
But
but
they're
it's
more
a
open.
lot, it's a lot easier for the private to look at and be like, okay, check. Whereas the A side, you're like, yes, no.
What are the interest rate difference between, let's say, an A, B, and a private? Like, how much do they really vary?
They could vary 1% to 2% on your B and your privates. You have lender fees on top of that.
Okay. And
But-
who's responsible for those lender fees?
The borrower is, so
Okay.
which is either the buyer
So
or
the
the
buyer or
seller.
the seller. Okay.
Yeah.
So if you're looking to make a move, if you fit into that box, an A lending might work for you. But if you need some flexibility, the B and the private are good options for not a bigger difference, let's say, in the interest rate itself.
That's right. Now, when you go to a private, you always have to have an exit strategy. So let's say that you are looking to do an investment property.
Mhm.
So you're going to take the equity, and you don't have somebody right away who's going to, a B lender who's going to go and do that. You get a private, get your financing in place, and then 3 months down the road, then take it to a B lender, or if they do qualify, an A lender.
Okay, so there's ways for people to get in the market on a short-term basis to
Yes.
then, once you're locked in and you're paying the property, then you can go to an alternative lender like a B or an A once you've got everything in order and fit into that box. Because now you're using equity, right?
That's right. Or even first time buyers. Like, let's say your income is not conforming and you have some down payment
Right.
to get into that. You can get in with a private, but then refinance with a B lender, or if you then qualify for an
So a
A
little
lender.
bit of short-term pain, but the long-term gain of now you're in the market collecting
Exactly.
equity. Okay.
Exactly, because after 3 months, you could then, qualify for like a 35-year amortization, and your pain point isn't there because your payments are a little bit less.
Okay.
And most people are renewing, not the 5-year, it's 2 to 3 years.
Right. Because they're watching what interest rates are doing right now, and they don't want to be locked in long-term.
Life changes.
Right.
That's what happens.
Exactly.
A baby, relationships, whatever.
Yep, growing, downsizing, kind of all the things we're seeing right now. Okay, so that kind of dives into my next question for you right now: fixed or a variable rate? What way would you go? I know we've talked about the types of different lenders we have out there, but overall, everyone always asks the big debate: like fixed or variable?
So the variable is probably a broker's favorite approach to go, because over the long run, you're paying less. But there is a pain point because there's 8 announcements every year,
Right.
and it's up or down, and most people do not.
They don't like the
handle-
fluctuation, right?
They don't like the change, but there is a way around that. So you could say, okay, so the variable right now is 4.7.
Yep.
And you're fixed. I'm just going to use 5.19. That's the average uninsured fixed rate right now that you
Okay.
can get. You could have your payments at the 5.19. So then if you do have an increase, you've already got adjusted to it.
Right. So you can adjust your variable to be approved at that rate, so you're taking that pain point out of it. You already know what it's going to be.
Right. You're like, okay, if I had locked into a fixed, this is what I'm paying.
Right.
So adjust your payments accordingly, right?
Okay, that makes sense.
Yeah.
So
But
then,
the other option is static. There's a few companies, a few lenders that will do a static payment so their payments stay the same. Majority do the other way though.
okay. And then in terms of, let's say from someone's perspective, again, you're saying most people are locking in a 2 to 3 year. On a fixed versus variable, what's the difference in terms of, are there penalties, payouts? Like, what's the difference for a buyer or a seller who are deciding to go fixed or variable in terms of penalties, payouts, things like that, if they do have to have a life change or a move happen?
If you're in a variable, it's usually 3 months worth of interest.
Okay.
If you're in a fixed, the penalty is higher and it depends on the lender.
Okay, it's good to know. So moving on to the next point here, I want to talk about pain points right now. So for a lot of buyers in the market, they're looking at the market as, okay, prices are coming down, but rates are going up. They feel, and again, they have lots of pain points. They've had lots of issues over the last few years. It's been a more seller-dominated market. The pain points of the buyers, how are you on the mortgage side helping them through that? What can you offer them? Advice, insight, programs, everything like that? What are you doing to help those buyers right now?
Communication is key. Communication all the way with the realtor as well as with the client and any supporting. We've had some clients where they want their parents involved because it's a comfort point for them and it's a very scary thing. So holding their hands all the way through. Communication is key all the way through.
And then in terms of like the pain points, let's say deposits, down payments, again, you talked a little bit about amortization, stuff like that. Like, what advice are you giving to buyers when they're coming to you with those pain points? Like, how do I get into the market? Like, what are you guys doing about that?
So it depends on the situation. So if you're a first-time home buyer, there are some programs available where you only have to have 5% down, sometimes 10% down.
Okay.
If you are looking to get away from the CMHC fee, then 20% down. Documentation, always first and foremost. Get that stuff in, get it reviewed, and have open communication with your realtor so he or she knows what's going on along the way.
Okay, yeah, no, I can totally appreciate that. Honestly, communication is key between myself and my clients. It's always good to know when you're working with a lender or another professional that they're communicating where they are at in their process so that I can update my client or so we're always in the know. You just mentioned there before when you're talking about percentages of down payment. So if you're a buyer, what's really the best route to go? Is it 5, 10, 20? Like, put as much down as you can. Do you save money? Like, what advice do you give people like that they have 20%, but should they put the 20% down?
They don't have to, but if you are putting 5% down, you're locked into a 25-year AM.
Okay.
If you put 20% down, you can go up to 35. There's a few that will do a 40-year, but not very often, but at 30, 35, that makes a huge difference in your payments overall.
Okay. Now, does the rates really change between a 5% to a, let's say, 20% down buyer?
Well, they do. So right now, 4.59 is a typical insured.
Insured is anything less than $1 million?
Insured is anything less than $1 million, yes.
Okay.
Any refinances are uninsured. Anything 20% down, uninsured.
Okay.
And the rates are a little bit higher. 4.59 is an insured insurable. 5.19 is an uninsured. That's as today's rates.
And the reason why I ask this is because I get a lot of buyers that they may be on the cusp of that where they say they have a set amount down, but let's say it qualifies for, let's say 9 or 14%. Like, at that point, they might as well put the 5% down, right? Or put the 10% down.
Yeah, I mean 5% down, as long as they're comfortable with the 25-year AM, they could take that other 15% and do renovations, or they could do other things with that money.
Right.
The CMHC, the insurance fees that go in it, are not going to hold them back that much. There have been a few, studies between comparing the two, and it's not a huge difference.
Okay, excellent. So we talked about the pain points for buyers and how you're solving problems for them, all the programs, incentives, stuff that you can do on your side of things that are available to buyers, even sellers refinancing. So now another question for the buying side, we're seeing the biggest transfer of wealth from generations. So parents, grandparents, great-grandparents, whatever the case may be. For those people who are inheriting that money or getting the gift from mom and dad, what do you need to document that on your side of things?
Documentation is key. So making sure that you have your gift letter and you have a 30-day bank history of when you received the money from the donor into your account. Don't be moving money all over the place because we have to then trace it back, which means we have to contact you to get all the bank statements. We've had some borrowers who have had multiple accounts, and so we have to have a history, 90-day history of every account. So if you have it as a gift, make sure that you tell your realtor, okay, I have my gift, 3 months. Like, make sure there's a time span. So when you have your down payment, keep it in that account. Don't move it around. Have your gift letter in place. That will make it so much easier, because we've had clients on, a few days before closing. Okay, that deposit doesn't match the story that was told.
Right, so you got to make sure there's no holes in the story, right?
Exactly,
So
exactly.
if you have the money, keep it safe, keep it in the same place. Now, when should they move the money to then, I guess, put down for the down payment, and anything like that, or they have to leave it there till closing?
Leave it there till closing.
Okay.
Give it to the lawyer.
Give it to the lawyer? Okay.
Give it to the lawyer.
That's the easiest
Yeah.
paper trail is going that
Yeah,
way.
because that is a pain point. If you have to go trace back 6 accounts, 90 days, it's a pain point.
Yeah, it makes things a little more difficult rather than one account goes from your account to the
Exactly,
lawyer's. Okay.
exactly.
All right.
And the other thing, like reverse mortgages. Like, I know we're not really getting into that, but that's where a lot of families are giving the funds for now.
Yeah, they're transferring wealth through that way,
Exactly.
right? They're pulling the equity that they built up over 20, 30, 40 years they've owned
Yeah.
property, and then that's how they're gifting it to other people. Okay.
Exactly.
Yeah, we can cover the reverse mortgage on the topic, but it's good to know that there are different ways for buyers to kind of get into the market, sellers, and again, we're seeing a big transfer of wealth.
Yeah.
So it's good to know how to document that on our side, let's say as a consumer, right? So
Right.
Awesome. Thank you.
Thank you.
All right, everyone. That kind of concludes the interview I've had here with Helen Rutledge of the Mortgage Coach. Thank you very much for tuning in. This is some great information. Really appreciate it. Buyers and sellers, just know that you're not stuck. There's lots of options for you out there. Mortgage brokers are here to help. Call your mortgage broker or call Helen for any questions that you have. My information is below as well as Helen's. Thank you for tuning in.
Thank you.
Take care.